All right, all welcome. February, we're talking about bookkeeping today. We're going to just quickly just go over some sites we have that we often share at the beginning of all of our webinars to kind of get an idea of what's happening here. Um, as you probably all know, we have a website where we have JKP Holdings Facebook group where we post events. We also post any kind of news we get, some cool stuff we got going on. All kind of awesome stuff. We also have a Facebook group that we also share information, have discussions. This group also talks about, from experts to beginners, we have a lot of conversations. We started back in 2014 or so and been doing it ever since. In this group, we have a fill-out form for investors. This is a database, not to be email blasted out, but allow you to link with other note investors across the country. For if an opportunity of a property is in a nearby area, you can call a local investor to ask them about it, the local area. Or if you find someone in your local area that's also a note investor, you can go ahead and reach out to them. It's a networking event. So it's pretty cool. As we all know also, we also have a YouTube channel, which this will be recorded at. And posted. It's just JKP Holding LLC. And lastly, but not least, this was a question that some of you guys weren't sure about in the opening invitation. This is a website that we created, allows us to email out when we have a property that's local to somebody. As requested, indicate where you're located at, not where you have investment interest at. We just ask you please to make sure you put where you actually know of versus where you want to invest. We send emails out asking about the area, property, house, all the kind of things. So we ask for you to be honest with that, and we'll blast you out at property when it's local to your zip code or city or whatnot. If you want JV, we have the opportunity for that if need be or want to be. So I'm going to go ahead and stop sharing that and let our guest here to introduce himself. I'm going to let Eunie go ahead and share everyone who you are. Before we do that, for some new people here, I think, if you know who I am, I've been doing this in the space in 2011 or so, and I've been working the notes since then. I started with a private equity fund that was really small at the time, doing due diligence and note evaluation of property valuations. Eventually slipped over to doing the investment side, which then I learned what I didn't know and all the nuances of that, which was greatly affected by bookkeeping. So this is something that's been overdue for me to have a webinar of, but now I've been buying for years now and networking and talking and sharing my information and do my best to bring it down to the least able body to understand what we're talking about. So if there's anything in here that you don't understand or don't know, please put in the chat, and I'll do the best between me and the guest speakers to answer those questions. So if we get a phrase, please let us know. So without further ado, Eunie, can you introduce yourself, tell them who you are, what you do, what your background is,
Sure.
and what you want to share.
Hi, everyone. My name is Eunie. I'm the owner of Census Financial LLC. And I do bookkeeping and accounting services for note investors. My background is that I have about 20 years of experience between corporate auditing and accounting, some in various different kind of industries, also as an auditor for a Wall Street broker-dealer. And I do really enjoy the bookkeeping aspect, and also working with investors to help them set up their books for future growth.
Awesome. Debbie, I'm gonna let you share your story. How'd you get space? What's your experience, and what can you share with the crowd tonight?
Hello to everyone. Can you hear me?
Yes.
Okay, I wanted to make sure I had my mute button off. I apologize, no video. I know that's always nice to have a face with a name, but I don't really have the opportunity, I guess, to video chat a lot. So I'm excited to be here. I have also been in the corporate world most of my life as an accounting manager. So 20, 25 years of accounting. I have spent the last few years, just like you guys, I wanted to be self-employed, so I worked to build my bookkeeping business. In 95% of my clients are all real estate investors, but I do for other small businesses or the self-employed as well. So I have spent the last few years focusing really on real estate transactions, and that's where my niche is, and I really enjoy it. So I'm looking forward to meeting everyone.
Wonderful. And Ted, can you share a little about your background, your history, and what can you share with the group?
Okay, hi, my name is Ted Deret. I am a certified QuickBooks advisor, certified in the desktop version as well as the online version. I have been certified year over year for the last 11 years. I am an accountant. My deeper background also is with the corporate world and operations. I work with every industry in the last 11 years, service, manufacturing, real estate. In the last few years, it seems as though I've spent a lot of time with individuals who are investing in real properties, both flips and long-term investments, and I've helped them to set up, problem solve, and train in QuickBooks, both online and desktop. And that is the crux of what I do. Set up, problem solve, and train. And hopefully I can help someone here today.
Awesome. So let's start off with this. We're dealing with debt versus a lot of assets. That's something that we kind of get over quickly. This can be somewhat like a rehab property, but a lot of the people in this space are doing JV investments. Debbie, would you share, you say you work with other real estate investors, would you share how this is different from traditional real estate in general?
Well, I think that might be partially a misconception as well, because it's actually very similar with the assets and the liabilities. With notes, I think the biggest difference is obviously during the course of the property, the intent can change along the way. And so as that intent changes, the way we code different transactions can also change.
Okay.
But there is a backbone and still a very standard way of coding those assets and those liabilities.
Okay. And I'm going to just follow up with that is, what is a typical problem you see that note investors who are doing their books are doing in a global kind of idea wrong, that make it difficult to work with, that you have to adjust the books when you receive it?
Well, I rarely receive books from someone because most investors I know don't do them. They just have spreadsheets. The few books that I have taken over, accounting is and can be very high level. And I think when I first start talking to someone, they think it's just the checks they write or the people they pay and the deposits. So they're always like, oh, I just have a handful of transactions. And they think it is really that simple, but each one of those things can build and have very complicated coding behind it. So I can't say that I take over books from investors very often because most just say it's not their thing, right? And they just don't do it.
Right. Eunie, from your experience, when you're looking at these books, are most people sit there to scale, or are most of the books that are put out there more of a micro? Because I'm presuming everyone in the space wants to not have one loan a year. They want to have 10, 20, 30 loans eventually. What is the difficulty of having one loan in bookkeeping world versus having 20 or 30?
So I think the difference is really the matter of organization, of how you are actually set up to record your transactions and keep records of all of your transactions and invoices. One of the most important things that should be addressed from the beginning is really kind of organization of how investors work through the details of their loans. Because in order for you to go from like 1 to 20 in this industry, it can be very complex, and there can be many transactions. As Debbie mentioned, it's not just about writing out a check. It really is a lot about how to actually account for that with the specific investments and how to trace that forward. So really kind of having, taking the time from the beginning to actually set up a efficient process, setting up your organization of your records correctly. Like all of that will provide dividends in the long run. Initially, I think most people would agree that it's not fun, but in the long run, it will definitely provide dividends, because when you're going from 1 to 20, you're going to have to go through transactions pretty quickly. And if there is a constant, back and forth in terms of like information flow between the investor and the bookkeeper, that can delay things, which is not good for the investors or the bookkeeper. So that's what
Ted, I know you have less experience than the other two speakers on tonight, but your background in QuickBooks is, many years. From your knowledge and your experience now, what are some of the things you're seeing that you want to kind of advise others out there of how to set their books set up? I personally, we use classes per property, so that everything can run. It's not by a JV investor or whatever. It's set by property, and every transaction is attached to that property. You want to kind of feed into how you would describe it?
Okay, well, you're right to suggest that everything is in the setup. Whether you have one note or 100 notes, it's just 100 times the same thing, and it's all about organization. And while the investors are smart and savvy about the operations of buying notes and moving notes and selling notes, most people are clueless about the application of the QuickBooks program and basic bookkeeping. It's kind of a giving. So you probably even know how to write a check and put a check into QuickBooks. You probably know how to make a deposit into the bank and put a deposit into QuickBooks. But in the background, how the chart of accounts is set up, how the customer base is set up in jobs, how the class is set up from the get-go. You're either going to have a successful set of books or a massive failure. So, and unfortunately, it's just not your fault. There's really nobody out there who has written a book, QuickBooks for Dummies for investors. It just doesn't exist.
When you say major fail, where is the major fail typically at, if you can pinpoint it in a section?
Well, in the world of bookkeeping, you have terms like assets and liabilities and equities. And these things have definitions, and they go in a certain place on a profit and loss statement. They go in a certain place on a balance sheet. And when done properly, you can hand those reports to a CPA, to another financial person, to anybody. And it's a language, and it speaks the same across all areas. But when the numbers are in there and all wrong, and there's negative numbers where there should be positive numbers, then you're not speaking the same language.
Okay.
We all speak English, but we have to speak not just QuickBooks, we have to speak bookkeeping and financials. And if you're not speaking the same language, then you're giving out just incorrect information unknowingly and unintentionally.
Okay. And I know one of the nicest features here is that I know Debbie works with desktop, and she's a desktop person. Eunie prefers the online version for certain reasons, and she's frustrated with the other reasons. So Debbie, can you share a little bit about the desktop, what features you like about it, what you can do with it, and kind of how you structure it? I don't want to talk micromanaging here, but how do you structure it in the life of a note deal, I guess you want to call it, in a desktop version of QuickBooks?
So the nice thing about the desktop version versus the online version for me is I feel like I have more control over every transaction in the desktop version. The online version, in my opinion, is designed for anyone to use. It's supposed to be easy for everyone. So QuickBooks tries to do a lot of things for you. But when you want to drill down and find out the detail behind an entry, I feel like it's very cumbersome. And it's also very slow for someone like me. The desktop version is much quicker, and I use the accountant's version, so I have a lot of bells and whistles that I can utilize that make, I can do mass transactions and mass changes, which comes in nicely, especially if I'm taking over some books that are existing.
Mm-hmm.
But even when I enter things, like I enter the data for every month, I can take all of the like transactions and group them all at one time. So for me, the desktop version is, it's just efficient and quick. And I find when I've used the online version, it takes 5 clicks to do what I can do in 1 or 2 clicks in the desktop version.
In the frustration that we've talked about this before, if you're working with a desktop, there is no way for us to access that data. However, we can ask you for a report at any time. You can send us a copy of our file, and then we have to run it. But we have to know we're running as well. Eunie, can you share a little about in the online version? There are some hesitancy with it. However, it does work. So can you share a little about how your thought process is, how to go from buying the note to actually discharging the note at the end, kind of a quick overflow?
Oh, the online version is, like Debbie said, the functionality, they're not there yet. I think in about 2 or 3 years, it will be a lot more functional and friendly. But at the moment, there are some limitations. But what I do like about it is the fact that the investors can have access to their books anytime they want. They just log on, and they have specific modules that they can access, and they can run reports by themselves. So that's a positive. But the other aspect is that there is limitation in functionality. So you do have to think a little bit about how to make sure that you capture all the data that you need in specific uniform way so that you could actually run reports. I would definitely say that I do a lot more exporting into Excel to research certain things, which probably I wouldn't have to necessarily do on the desktop version.
Okay. And for most investors, the online version allows us to access that file at any moment. We may not be able to enter the data, but we can go into that and run any report we want at any time quickly. Ted, your impression of the online version versus the desktop version, and some maybe the pros and cons from your point of view from years of QuickBooks experience?
Yeah, at this point, it was mentioned that QuickBooks Online is a newer program in the world than QuickBooks Desktop, in that it's been around for under 10 years, whereas the desktop has been around for about 25 plus. And it's been enhanced up and down and sideways. So the reporting capabilities for the QuickBooks Desktop, you have a lot of report possibilities, and you have a much better way to manipulate the reports and customize them. Whereas in the QuickBooks Online, you have much fewer choices as to reports you can get, and your ability to manipulate them is incredibly minimal at best. So it may not be the most ideal tool for this industry. If you get a basic report that gives you what you want, great. But your ability to manipulate, to tweak it to get what you want, if it's not what you want now, it probably won't ever be what you want. But what they don't tell you in the background is every 4 months, they're constantly doing updates, and they just make updates. So it could be one day that you're working on a file and you see a screen and you're familiar with it. And the next day, that same screen all of a sudden looks slightly different and no one told you anything. You're wondering, what did you do wrong? The reality is, no, they just did an update and they just didn't tell you. So they are working on it all the time. And maybe in the next 10 years, it will be as robust as a desktop, but just not today.
And I'm gonna definitely be going to I'll be definitely going to some of the questions in a few minutes. I did see Adam's question, which was answered, Joe and Joshua. I do want to just bring up one thing also, is that when Deb, when you're recording something, one of the reasons that Ted got brought in here was one of the questions of when reporting a holding cost and reducing the cost of a joint venture partner and everything else. How are you typically recording a purchase of a note and any kind of expenses to that note? How are you typically reporting on it? More of a mass scale, but without going line by line.
Yeah, I was going to say it can be handled a few different ways, and most of it depends on what your agreement is with your JV partner. So if they have contributed specifically to holding costs, then we want to be able to, to show those deductions to that portion of the investment. But the holding cost for the asset is typically where you're going to put items that you are possibly, repairs or things that you're putting into a property, even if you're just trying to protect the asset along the way. You almost have to do it in the balance sheet when you have a JV partner. But that can, it can change depending on, again, the status of the note, whether it becomes REO along the way. But yeah, it almost has to be on the balance sheet.
Okay.
I don't know if otherwise I'm going to get into really minute details. I'm not sure that'll be helpful.
I want to make sure that the participants online, I'm not going to be going through a line item scenario. I'm looking more of a global kind of idea for everyone. And I also want to make sure the people here know that these are not tax questions. We're not talking about tax strategy and whatnot here. We're just talking more the bookkeeping side of it. The one Joshua question was, so what good way is to set up classes? Should each note have his own class under each asset? I'll go ahead and let Ted answer that. Do you set up each note as a class itself?
Yeah, what I do is actually break it down a little bit more than that. If you have investors, I will create an investor class, and then under the investor, I'll have a subclass for the particular note property.
Okay.
So again, it's all just for the sake of reporting. So depending upon what kind of report you're looking for or you need to see, or if you want to report specifically just for your investor and no one else, it's just it's an opportunity to segment the report into just a specific investor rather than having to show an entire portfolio to someone who doesn't want to see something that's not his or hers.
Okay. I'm looking at the questions again. Joe, is there a custom chart of accounts that has been found to be appropriate for note investors? I know there's a default chart of accounts, and then when I started doing my own books, I thought that would work out great. And next thing I know, I was deleting, adding. It just don't work out that well. Debbie, what would you say, what are your typical charts of account, generally speaking, expenses and stuff like that? How are you kind of generally putting in servicing, insurance, all those kind of good things? How are you breaking it up? And if the expenses are paid by the investor, how are you breaking it up versus a joint venture partner?
So the chart of accounts, I have had, investors call and they want to do their own books, but they want the QuickBooks file set up and they want a basic chart of accounts in there, which, I have done and you can do. But I will say that I build my chart of accounts based on, your transactions. So I don't just sit down and start adding all of these random expenses that I think you might use. I wait until it actually comes up. And so the chart of accounts for me is always evolving and building. But the chart of accounts actually should tie almost directly to the tax forms. So a lot of times I'll also see books where people get creative and create certain expenses or names because they don't know where to, they don't know where to put something. And so those line items, if you look at Schedule C of your taxes, there are line items there of the expenses you can capture. And so the chart of accounts has to be able to tie to that. Okay. So that's kind of where they come from. And then remind me your second question.
It just,
Second part.
what are typical, you know, if you have an expense, say, you know, you're breaking down a servicing, how are you typically breaking those down as per, you know, what kind of, is that an expense account? Is that, how are you typically breaking it down for the joint venture partner as well as it was paid by the investor himself? Generally speaking, again, I just trying to give
Well, you have a note servicing company, for example, that you get a deposit from. You know, that's going to typically be broken down between the principal that goes towards the note, the interest income, and then that can vary depending on if you need to split it with a JV partner. And then a third part of that gets coded is the actual note servicing expense. So that one deposit can have multiple lines when it's broken out.
Okay. And are you considering each transaction a different expense or one whole transaction from the servicer?
A transaction would just be the one item that actually hits your bank account. So it's either a check or a deposit. So the transaction is the one entry in QuickBooks, but it could have multiple lines.
Okay. And Eunie, I know that a lot of us deal with a lot of different things, credit cards, bank statements, servicing, collateral files, just go on and on and on. For a normal investor, that's a lot to keep up with. Is there methodology ways that you guys can log in and not touch my money, but go in and transactionally take this stuff down? I know I'm taking it down to some level that some investors already know, but I want to make sure that every investor understands the benefit of having someone handle their own books. So my bank statements, my SN servicing, my Madison, whatever service I'm with, FCI, what can you do as a bookkeeper to help me not worry about the invoicing part of it?
Well, the ones that are actually regular and steady, like the servicing statements and the collateral file charges and so forth. If you can actually give your bookkeeper access to them, they can definitely just go in and like pull those specific invoices. But it should be clear you and your bookkeeper really should have a conversation about what you're going to be responsible for and what the investor is going to be responsible for. Because the thing about this industry is that there's a lot of unique transactions. Unlike a typical corporate accounting where 80% of the activities is repetitive and 20% is unique in any given time. In this particular industry, it's the other way around. It's 20% is repetitive and about 80% is unique because you are all doing different things with your notes at various times. So, your bookkeeper can definitely go in and pull certain documents for you and kind of record those. But there will be other invoices and charges that your bookkeeper will have to know. So, yeah, the communication between the investor and the bookkeeper is very important.
Okay. Ted, Michael Norris asked a question that, he talked to a couple of different bookkeepers that got different responses. Should he take a course on QuickBooks? Or is that too general, a 3-day course kind of thing for what we're looking to do? Another question was, if you take a property like a note and then make it REO, does that change the category?
Yeah, well, as far as those courses go, I've taught them, and they are incredibly generic. They'll help you to maybe know how to navigate the program, but this industry is so darn specific, and setting up the chart of accounts will never be discussed in any of those classes because this is such a unique industry. And when a note morphs into something else, it's the chart of account doesn't necessarily change because hopefully maybe you've set it up to account for all these different things. You just have to know what the entries are to move the characteristics from what it was to what it now is.
Okay.
And Eunie makes the point. If you're going to have a bookkeeper do it, you have to have constant communication. And if you're going to do it yourself, you just need, I guess, to work with a bookkeeper to really get fully trained on the process.
Gotcha. I'm going to go back to some more questions. I know someone had their first question and I did not see it, so I apologize. Peggy, what was your first question? I apologize, I didn't see it at all. If you do see it, please post it again. I know somebody asked about having an account for a pool purchase as one asset. I don't advise that. I think that you should have an asset per asset, a class per asset, because expenses are individually by asset, in my understanding of things. With the setup, Debbie, I know a lot of people are. Peggy asked a question. Her account says distressed notes are treated the same as discounted bonds. I'm not sure if that is something for answer on here, but if anyone wants to jump in and answer that question, discounted bonds, I guess, also borrowing, as a lender of any kind of debt, they're kind of set up the same way. Can you answer? I mean, I don't know who can answer that question, Peggy, but I'll let whoever wants to jump in answer that.
So I'll take a crack at it. So it's not completely the same. The discounted bonds, if I understand the way this accountant answered the question, the discounted bonds, the way corporate bonds are treated and so forth. The distressed notes are somewhat different because these are distressed, meaning the value of the note itself against the UPB is significantly lower. Discounted bonds, we're talking, 96 to 97% of par value that you should be expecting and so forth. So the accounting is not exactly the same, as those two are almost different instruments, as far as I can tell. Yeah.
Okay. The next question was, should we set up an unrealized gains account for the discount we get out of the UPB for non-performing notes? Because I ran in early in my career doing this. My accountant, when I went to file something, said, "What was the unpaid balance when I bought it?" And I said, "I have no clue." So the question was, do you use the unrealized gains account for the discount? Ted, Debbie, I'll let you guys jump in here. Debbie, do you want to answer that one?
I do not.
Okay.
With working with the two CPAs here in the Dallas area that I work with the most, and one is specifically real estate investor CPA, who I have much admiration for. We do not. I mean, basically, we put that note in there, that asset in there at the purchase value. We apply that principal that you might be receiving along the way to that. And at the point that you have the return of that money, we begin coding that as investment income above and beyond that. So I know that that's a big topic out there right now, but even the two CPAs, that I work the closest with still don't really try to touch that unrealized income.
Okay. Next question was, at what point do speakers recommend using Microsoft Excel to QuickBooks? Is there a certain number of notes you would say to switch over? Or can you do all this stuff in a Excel kind of file? Ted, what do you want to jump on?
I didn't mean to interrupt.
Go ahead.
Yeah, Debbie.
Well, that was just kind of a quick one for me. It's like start QuickBooks from day one.
Yes.
Yeah.
Ted, what would you say about that? I always look at the fact you want to grow, so don't start.
Yeah, you have to assume if you're going to get into this that you're going to start with one and maybe go to 50 before you know it, before you even intended. So, set up QuickBooks. The effort to set up one is pretty much the same effort to set up 50. Yeah. So be prepared to grow.
Okay. Feel free to keep getting the questions going, guys. I don't want to, there's a lot of questions regarding this stuff, from expenses to running reports. One of the questions we had going into this whole thing was how to handle JV money being reduced. And Ted, I know that that came directly from a post that was made of yourself of reducing the joint venture money down as being spent. You want to describe a little bit of what that meant and what that was coming from?
Okay, well, that's going to be, I guess, set up as a sub-account of the property note itself. I guess I in my books, I had set up as like reserve funds. Mm-hmm. So it's It's a liability that we need to keep track of in the form of, I don't know, not journal entries, but simple transactions, when you're cutting the check or when the check is being cut.
So as we spend if we get $5,000 from a joint venture partner to spend money down, keeping track of how much money we've spent of his, I believe was the question or post on there.
Keep track. So you're keeping track, but every transaction, every dollar spent is a transaction. So that should be entered in the system accordingly so that a report can be sent to the investor to say, this is how your money got spent, dollar for dollar. This is what you started with, this is what you had left, and this is how the dollars got spent in the middle.
Okay. Eunie, can you share a little bit about how joint venture partners reports are typically shown? I know there's some question about what other ways to use FleshBooks and Wave. We're going to stick with QuickBooks as this is kind of a QuickBooks kind of thing. I don't like kind of going off the beaten path. Ian, I know you can definitely go into different ways, but I would stay with the QuickBooks. Don't mess around with your accounting numbers. But for joint venture partners, reports and whatnot, Eunie, do you have anything you can share or talk about how a joint venture can see what's gone on in his deal to know where he's at with everything?
Okay, so I think this is where I can maybe share
Okay.
a file just to kind of show you.
Sure.
So let me open it up first. Just do a quick. Okay, so.
I'm going to share a screen and hit the window you want to share.
All right. Okay, it says host disabled participant screen.
I apologize. Give me 1 second.
That's you.
That's me.
That's
I had
you.
someone sharing screen before. Go ahead.
All right. So this is kind of what I would try to have for the clients. It kind of shows you for joint ventures exactly who purchased, who brought in what amount of money, and where they are in terms of their expenses. So this particular client brought in 81. It's broken out between it's broken out between these two investors.
Mm-hmm.
And the capital infusion of those two investors is broken out in these 3 buckets.
Awesome.
Yeah. So it kind of shows you at a specific point in time how where you are in terms of your investment, what you've spent, so forth and so on.
And
what to the
it
deal.
without opening up everything, what Eunie's showing is an Excel version that sometimes when you run the QuickBooks Online you need to use. And the plus signs on the left-hand side actually expands all the data that you can see what was spent, what was not spent, all that stuff, and what can be used. So it kind of narrows it down or, attracts it to it. Debbie, when you guys share reports and stuff like that, how do you kind of share with the joint venture partners, with the note investors you're working with?
So, well, first I have, I won't even go there. Once I update the QuickBooks file every month for my investors, I send them a copy of their QuickBooks, right? So they can run all kinds of reports at any given time, really, that they want to, and they can filter those reports, by JV partner, and then under that, it's by class if they have multiple classes. So I rarely run any type of report for my investors.
Okay.
So we do not share a QuickBooks file. Honestly, I did that in the beginning, but unfortunately, the files would just get messed up along the way, and data would get changed, and things would get lost. So I own the actual file, but I send a copy to them, at any point in time, I guess, that they want it, but I don't have anyone who gets it more than monthly. And because, like this month, they would get data through the end of January, so that's the data that they would be reporting on.
Awesome. And it sounds to me is that any reports we need to be ran, capital infusion, or where the basis of it, that just be shared with the investor. You run the report and send it over to us, correct?
Yes, right now, I do not break any reports down by JV partner, but I send my investor the profit and loss in full and the balance sheet in full. And so then that can be filtered down.
Awesome.
Is that answering your question?
Absolutely.
Okay.
Eunie, when you're working with yourself, and we have a ton of invoices coming out, and what do I owe? When do I owe it? We get trapped up. Someone working full time may have more problems with this. Is someone doing this full time? Working full time versus doing this full time. Do you show in your reports what currently invoices are due? I know desktop and online versions a little bit harder for online, but do you show that current date-to-date payables that are due, receivable for that matter?
Well, I have been doing that, but I think what will happen going forward is if things are going to go much more towards cash basis, and those specific reports are going to be a separate sheet, separate Excel sheet probably, that kind of provides the investor with like what they need to be paying attention to for the coming month. Because like I said, because there's so many transactions that are unique and it's very high touch, you do not want to you do not want to get lost in the forest from the trees. So you just want to make sure you keep the goal in mind and make sure that you have all the actuals in QuickBooks, and some of the other information like, what do they need to pay attention to, that will be just done separately.
Awesome. I see Chad had a question up there. I was going to shoot to Ted, but I think that we want to make sure we keep this as general, as specific. But I'll give it a stab, and if you can kind of keep it general, I appreciate it. The question was, if borrower starts repaying and you have a JV partner with a 50-50 split, where you send half the money amount, the payments, should all that be considered return of capital or reduce the investment accordingly? My experience, it depends on your joint venture agreement. Depends on what goes first, but they want to know, are you returning capital to them or reducing their investment?
Again, it really is based on the contract, but generally speaking, if there was no understanding, I guess I would be returning capital first, and then once that's done, then it becomes income.
Gotcha. With that said, I think that Debbie, with everything going on here, what are some of the difficulties you have with working with note investors who are working with you currently that you struggle with, that someone that may want to come on and use your services could just be more aware of and what to expect? Sorry, daughter just showing up, say hello. So what would you guys say is Debbie, what would you say something that people who are new can kind of avoid with that?
Can you hear me?
Yep, I can hear you.
I think what I've learned over the last few years is I work with a very strict process every month, because that really helps keep the investor in line as well. And when I first speak with someone, they usually have a lot of ideas about, what they think would work, and, what they would like to do and what they would like to see. And it doesn't always line up, I think, with bookkeeping, because there's two thoughts. It's a great thought that, and when you were even talking about the payables and being able to see what you owe, you have to decide if you want an employee bookkeeper, or do you, want a bookkeeper who helps you each month finalize your financials? Because if you're looking for someone with a lot of day-to-day interaction, that's an employee, and that can absolutely be done, but you have to think about the cost, what it's going to cost to work with a bookkeeper that much. So I have it very streamlined where, I have access to almost, I think 99% of my clients, I have logins to everything, their bank accounts, their credit cards, any type of mortgage accounts where I can see principal and interest. You know, I have direct access to those things. So every month I can be proactive and I go in and get all of that data, and I then send it to the investor and they can fill in the blanks and help me in that respect, because it's much more efficient than you know, as the investor, you feel like you need to tell me a long history about every transaction, and because you know what's going on. But really, once it gets to my side, it's, you know, it's very black and white. It's like, well, was it a check or deposit, and how are we going to handle that, and then how does it evolve from there? So I think the answer to your question is a lot of streamlining, and I tend to be the one to guide the monthly discussions.
So are the people emailing you invoices? They receive it? I know, you know, we drive our accountant and bookkeepers crazy because we do things without thinking. But are they forwarding you an invoice and saying, here you go?
They only send me an invoice if I request it. So once I'm familiar with somebody's, you know, books and the way they handle it, I can code 80 or 90% of the transactions before I ever send it to the investor. And then that's when we get into a little more of the nitty gritty about, well, I see you purchased this note. Now, you know, what's the address? Who's the JV partner? And those type of things to make sure we break it out correctly. But a lot of times I don't need invoices. Now I do need something like servicing, right? Because I need to know the breakout of principal and interest and things like that. But again, usually a lot of that is access online as well.
Yep.
So I always tell my investors, for the most part, you need those invoices. You need backup for everything if you're audited.
But you don't care to see.
I don't necessarily have an invoice, but I'm going to trust, you know, that if that transaction hit your bank account, that you have the backup.
Gotcha.
But again, there are invoices and things I need to see, but I try to get as much direct access as possible.
I would presume if the invoice for, say, you know, 7 O&Es and 4 of them are going to one JV partner, you know, 3 go another, you would have to know which JV partner is attached to which O&E, I guess.
Yes. And, you know, that can kind of be handled in different ways.
Sure.
We usually kind of fall into a good routine with whoever the investor is, depending, you know, that's a little bit of mix of how they work and how I work. Some of them just keep a list of their assets in an Excel spreadsheet and a JV partner, and some people, you know, whenever they first do a new purchase, then they send me the details at that time. So that can vary along the way, but again, I really try to keep it as streamlined as possible.
So Ted, Marco asked a question, and I'm going to just make sure I kind of quickly go over this, Marco. He's getting his first note. He's going to set up a QuickBooks and all that. He wants to know, you know, do you set up an expense, asset name, expense type, expenses? Are you breaking these down to the nitty gritty of, our servicing invoices can be $1 for, you know, mailing, and, you know, $3 for this, and then $68 for insurance. Are you breaking them by expense type?
Expense type. No, you could put the type in a quick memo, but you are breaking it down based on how the bank is being affected. If you're spending $1 on a stamp and $2 on certifying something, and that's how the bank has been affected, then your books have to match the bank.
Correct.
But as far as expenses go, it sounds like to me it's a misnomer. While these things are in fact expenses in the real world, in QuickBooks, they're really not identified as quote unquote expenses. They are charges that will go against the note's reserves, but they're not going to be in an expense category per se. They're really sitting on the balance sheet, believe it or not. So while we say they are expenses, they are really, from a terminology perspective in QuickBooks, they are just transactions.
Okay, so you can't pull a report and say, I want to know all my mailings that I used the post office for in the year of 2017 and pull every one of them as a individual kind of expense. I think it can get crazy with that kind of stuff.
If you really, really wanted to, if you had the mindset to do something like that, yeah, we could set up the chart of accounts to do that. But gosh, you
That's
would.
all.
I don't know.
You'd be
That's a
smarter
certain
if-
personality. I don't know. I'd probably want to stay away from.
Awesome. So
This
how
is
far?
this is already a highly detailed industry. You know, you kind of want to make this as simple as possible, given the level of detail you're already forced with.
You know, Eunie, how far do you break down things yourself? I mean, how far, you know, as Ted says, this can be broken down to pennies and different kind of expenses and all that stuff. How far do you typically break down your invoices? Servicing is probably the most common with a million different whatevers. How do you typically break down your books to show individual ones?
Well, I think at the end of the day, it really kind of does depend on the investor and how they want to see their books, not just for today, but for the future. You know, being from a corporate environment, I do like to break things down to the most granular level possible, but it is very time consuming. And as Ted said, sometimes it does get in the way of just recording information accurately and correctly and timely. So these are the things that you kind of have to think about when you're actually trying to construct your books. You know, it also kind of depends on the vendors, especially in this industry. There are many vendors, and they're not all equal. Some vendors are very detailed with the information that they're providing you, and other vendors is just one line item. So there's always this, you know, push and pull in terms of like what's the benefit, what's the marginal benefit of doing something a certain way. So I think, you know, that's kind of the kind of conversation you may want to have with your investor, and you know, kind of see what do you want to do, not just for today, but for the future.
Okay. And I know what Ted would think, what Eunie and Debbie, what Eunie is saying is that she breaks it down into like a journal entry and then puts in the memo what the expense is for versus using the expense or account part of the QuickBooks field. So there's not an expense kind of field. It's all part of the dealing of the note and breaking it down to a memo field. So I don't know what your opinions on that is. I mean, everyone does it a different way. As long as recorded, that's the biggest factor.
Well, you know, there's so many different ways to code and to work in QuickBooks, but one of the most important things is, with all of your expenses and all of your transactions, is you have to be recording the name, who paid you and who did you pay. So, and then, you know, when you're doing a journal entry, there is a name or a payee field as well. So that's, you know, one of the most important things you do, right? Because at the end of the year, you have to do 1099s for anybody that you've paid.
I'm glad you brought that up too. So just a note that we would talk about 1099s in a minute. Go ahead, sorry.
Yeah, so, you know, however the transaction is entered, you just have to be hitting all of the key points of bookkeeping. And yeah, I'm glad you're going to touch on the W-9s maybe and 1099s, because that's probably a disconnect. As investors, you guys are very much, well, I paid this person for this. So you're very on what it was for, right? Well, as a bookkeeper, I'm more focused on, maybe not even more, but equally, who got it, the amount, and then the purpose, because that purpose is going to tell me how to code it.
Okay.
But, you know, so I don't use any journal entries. I do direct transactions for, you know, everything that hits your bank account gets imported into QuickBooks, and each one of those transactions is a single item, and so all of those things get recorded.
So were you recording, say, $1 mailing fee at SN or Madison or FCI charge? Are you breaking it down to that kind of level?
Well, and also when we were just talking about those expenses, I was typing a reply, but I hadn't hit send yet. And like Ted was saying, is a lot of times those particular expenses are going to go in that holding cost field because you have a JV partner. But if this is just a note that you own yourself, then those expenses, again, depending on the situation of the asset, but chances are those expenses are going to hit your P&L directly. So at that point, then yes, you need to have postage, and yes, you need to have due diligence expense. So you would break them down. But like Ted was saying, if this is more of a collective, put it in the holding cost and we're going to split this with a JV partner, then you don't always have that detail. But my P&L is very detailed.
Okay. So your expense field is wide and narrow, very deep for the fact you can run a report on any kind of expense you may have for all your deals.
Yes.
What's your feeling on all that granular?
Sometimes I break those expenses down with some subcategories as well that you wouldn't normally have to do if you were doing your own books. But because I'm sending that report to my investor, I want them to be able to see the breakdown. And here's something even this simple. Like, let's say bank and service charges. You have some bank and service charges on your bank account and maybe on your credit card. I don't lump them all under bank and service charges. I'll do bank and service charges with a subcategory for your bank and a subcategory for your credit card. Now, you wouldn't normally have to do that, but what I want my investor to see when I give them that P&L with detail, hey, here's how much my bank is charging me, and here's how much I'm blowing, in credit card fees or whatever, interest. And that's really just as an ease of looking at data for them.
Okay. And I know that I got charged back in the day for $1 for some kind of bank fee that I totally forgot. It was $1 off my books for a long time, and I couldn't figure out what it was. And
when you're talking about $1, I know that you guys think it's silly. Bookkeeping, everything has to match down to the dollar.
Then when I read a balance sheet on my $1 off, I'm like, you got to be kidding me. Ted, what's your thoughts of that? There's different kind of school of thought of this expense sheet, and Chad, I'll get to your question in a minute. Is breaking this down? I mean, that's a hard kind of conversation. Running reports are great, and it sounds to me what Debbie's saying when you're saying if you're working with a JV partner, you need to have that level of showing that JV partner what expenses are what instead of a bulk kind of thought process.
Yeah, you don't want to feel like that you're giving the JV less information than they deserve to have. My first conversation with a new client is always, what's your level of detail? What's your threshold? Are you incredibly detailed, or do you want to keep this simple? And based on that answer, we work within the framework of what their comfort level is. Okay. So, do you want to have, like I said, the bank service charges broken down to credit card bank, or does it simply the header of bank service charges? Does it work for you? Yeah. Well, going either way is correct. It will serve the purposes of a tax return, but it comes down to, what's comfortable for you if you're looking at a report? Is too much information mind-blowing, or is it that level of detail that you are as an individual?
True.
Yeah.
So the question, Jennifer, I'm going to get to that in just a minute. I want to make sure we cover Chad's question about expenses be considered cogs of the note or expensed when they're sold. You or Ted or Debbie, do you guys want to jump in at all? That the question is, so would the expense be considered a cogs of the note or expense when it's sold?
Go ahead, Eunie.
Okay, so COGS is a manufacturing term, but if you're asking whether it will go against your revenue line, just want to kind of distinguish that. If you actually have investments and you're the only person who are actually managing your investments and you have no other JV partners, you pretty much your business expenses are going through your P&L. In terms of, I'm sorry, what was the specific thing?
It was just the fact that is it cost of the note or expense when it's sold?
What is it? So cost of the note, expense when it's sold. It depends. If it's a note that's been invested with your JV partners, then it is treated as an expense when it's sold. When there is a specific type of expenses that you're going through for your P&L. For instance, if you're ordering O&E titles and you actually don't know whether this is going to actually turn into a deal or not, you may be putting that through your P&L. So it kind of depends. Generally speaking, you don't have anything to record until something is sold.
I want to just jump in this. This is the big thing that was talked about a couple of years ago, and it finally come through. And gave that 1099s. Are we issuing 1099s to joint venture partners? Debbie, Eunie, Deb, what's your personal feeling about doing that kind of stuff?
I would say they're only going to get a 1099 at the point where they're sharing income in excess of $600. But the returning of an investment, it does not deserve a 1099.
So when they profit.
Yeah, exactly.
Okay.
Sorry, am I muted?
No, you're fine. You can speak anytime. You have free reign here.
Well, I was hitting my mute button, and so I lost track of whether I had it on or not. And it doesn't show me.
So,
yeah, I agree with Ted on the 1099s, right? That's not, 1099 is not for the JV partner for the income.
Okay. So, Gabe asked the question: Is a no purchase of COGS? Is that part of the COGS?
No. Cost of goods sold falls on the profit and loss, and your note purchase falls on your balance sheet with your assets. So I don't think that's directly related, but there may be an underlying question there that I'm missing.
Yeah.
This whole industry, for the most part, revolves around balance sheet transactions. So a cost of goods sold conversation is really quite irrelevant and really has no place, from what I can see, in the industry.
So the question was, is it considered inventory?
Take place on the profit and loss statement.
They're talking about it being actually inventory. They're considered inventory, so it should be COGS like a flip. Is the asset...
No, 'cause inventory and even a flip, the flip house is an asset. It's not inventory.
So is note an inventory inside the business, I guess, is the question that Chad's asking. It's not inventory. It's actually a liability. Someone owes you money.
It's actually an investment. It doesn't work like in a regular firm, a manufacturing firm, where you actually have inventory that goes to COGS when you actually sell it. It does not work like that. It's completely different. It's an investment. So really the category of COGS does not apply at all.
And the confusion might be, I could see that you guys might speak about your, the number of notes that you have as your inventory, but it's not the typical, definition of inventory. Does not relate to the assets and the notes.
Right.
So I guess the question, that Martin was asking before was, is this considered an asset or a loan in QuickBooks? What is a note?
One or both. It's definitely an asset, but you may also have a loan tied to that, or a liability if you have a JV partner.
Martin, I hope that answers the question for that. Jennifer wanted to follow up on the 1099. What forms would need to be generated for JV's partnerships profit besides 1099? I'm not sure. Jennifer, you want to expand on that a little bit? When you issue 1099,
you may have some I'm just at a loss. Schedule K, like, what am I trying to say here?
Jennifer, you can expand on that. And then I guess besides the 1099, what forms need to be generated for JV partners? There you go. Is there any reporting required for profits you pay your JV investors? So I guess if profit is issued over $600, should you be giving your JV investors any kind of forms? And my answer would that be 1099.
Under a Schedule K1 that you might want to think about, but
1099 would be the only form you're giving out to them showing the profit they gained.
Well, it kind of depends on whether you actually formed a legal entity that is an LLC that you're working with your JV partner from, where you actually are going to generate a Schedule K1. Otherwise, if you just have a joint venture, which is a very generic term, it just basically means that there's no defined term by the IRS. So if you're working with someone, you guys have a personal contract between the two of you, but you've never actually created a legal entity, then you could actually do a 1099 miscellaneous form to kind of let them know that they've received X dollar of profit on a sale that occurred in the calendar year.
And you have to issue 1099 to every joint venture that makes more than $600 that calendar year, correct?
Yes.
Actually, I can add to that just a little bit because when I first started this, it was a question that I had with the CPA I was working with because obviously we have to report interest on a 1099 INT form and things like that. So a lot of partners, you know, not set up through an entity, but just private money per se, you are not required to give a 1099 to private money. So that is kind of a differentiator in that respect. And so
What's
if you
the
just
difference between
have,
private money and joint venture money then, if it's private?
it's not. It's just a term that you guys use.
Okay. Okay.
If it is just, you know, a setup between, you know, the two of you, and here's the agreement, and they're going to get some interest, and they're going to make money here
That's
or
where I'm
there.
going to go, and Liz Groomer just jumped in there. That's exactly where I was going to go. If it's set up as a joint venture where you're splitting 50-50 versus an interest rate you're giving them, that's where it comes into play, where it's a loan for them versus being an investment. Is that correct?
It's more about the entity, I believe, whether it's just, like Eunie was saying, if you actually have an entity set up,
Okay.
then it would be more of a official setup where a Schedule K would be recorded. But private money, if it's just between two of you, and you have a document maybe that, you know, says what you're doing, but it's still private money.
Okay. So if a joint venture and you give 50-50 split, you don't have to do 1099? Is that what you're saying?
Right.
Okay. So the next question was, how can you track the profitability of a note if it's on a balance sheet and all the cash flows are on the through the IS? There's a question that Gabe asked. Not sure if.
Well,
I
the
think
balance sheet.
because it's a big answer.
Okay,
The balance sheet is going to reflect the purchase, and the balance sheet line item is going to reflect the sale. So at the end of the deal, when all the expenses are in, the balance sheet line item will show either a plus or a minus. And what you need to do, since the deal is done, is balance it to zero. So at that point, you're then going to transfer the funds off of the balance sheet to the profit and loss statement as a gain or loss on the sale.
Okay. I'm gonna answer Karen's email question. She's asking if any of you guys work with a pipe drive or such programs that integrate with QuickBooks. I don't want to get too much into that. That's more of a specific question. And some people here are familiar with pipe drive, some people aren't. Or any task-based program. I guess they're trying to link a quick way to link right into QuickBooks. Do you guys have any experience doing that, or is that something that you just want to handle the books and not be linking to other softwares?
Well, as the third part of the application goes, there's like a gazillion of them out there. I'm not familiar with that particular one, but if it does in fact make your life simpler, and if it drills down into QuickBooks such that you don't have to do the bookkeeping, fantastic. It's definitely a plus. But I personally am not familiar with that software, but I can say all these third-party applications exist for the purposes of making your operations easier. So in theory, it's probably taking out the bookkeeping concept of what you're doing, and it's more operational. So it's probably a plus.
So I'm gonna jump real quick. The Chad's question is, if your expenses are legal, taxes, are they added to the note purchase to increase the value of the asset? You're decreasing the loan that you actually invested in. So your investment goes down to a point where you start making a profit. That would be my understanding is, you know, when you have a noted purchased and you have an expense like legal or taxes, does that increase the value of your assets? So your expenses increase the value of your asset or decrease it? You know, I guess the question. We have head nod scratches. Good job, Chad.
Well, the books that.
Well,
the books
I mean,
that
you're putting
did,
something into your asset, right? So you it's just like a flip house. You buy it, and then you are adding value to that by doing the improvements, right? So I think what we were struggling with is, is that adding value? But in your books, it is an asset in, on your balance sheet. So yes, in general.
Okay. Let me just make sure I get a couple more questions here, and then we'll start. Bill asked a great question. You're all in different states. Do you know anyone that are CPAs could do well with note tax returns in different states? Is there a good way to find a good CPA that understands notes, or a different sector of investing that would be similar to the notes that you can search for a CPA in? Great question, Bill.
It is such a specific industry. I could see how it would be difficult to find a CPA who's somewhat expert in it. I guess what I would do is look at the larger firms, or find someone who's maybe heavy in real estate, and see if they have some common crossover knowledge to notes.
Okay.
That would be my approach anyway.
Yeah, I mean, my other thought is if you find someone that does lending money, they're lending money out like crazy, that they understand the whole factor of, being a lender, because that's what we really are. We're buying in debt, and you're just transferring it over. And I don't want to carry on too much longer. There's a lot of specific questions that I'm sure we can go on for 3 hours, and I'm sure you guys can speak for 3 hours. But I want to make sure that, we answer the most of the questions we can here in general form. I think that we've given a lot of information out, and I did share your contact information in our chat. I'm going to repost that as well. You definitely can reach out to any one of these speakers and ask them, specific questions. I do want to ask every one of you guys, I'm sure it's a yes, are you guys open to working with note investors without talking dollar amounts? Is that something you guys do? And how often are you doing the books for the investor? Debbie, I'll let you start with that one. Are you open for new clients? And how often are you giving their books, reports back, or, however you give back to your investors?
Sure. Yes, absolutely. I am taking on new clients this year in expanding and growing. Currently, I process the books monthly for my investors, but I can tell you, I just had someone ask, can it be weekly? Yes, and there is always a cost. So that's really what it boils down to, right, is our time and how much you want to pay. So I definitely promote myself as affordable bookkeeping, which is why most of my clients have selected monthly.
Okay. Eunie, are you open for clients, and how do you typically report your books to your investors? And I'll put kind of a gold nugget on that. How, because of the space where it is, are books up to date as the end of the month?
Okay, so yes, I'm open to investor clients. There is definitely a time delay with the books in this industry. A lot of times, some of the vendors are not sending their invoice or their information on time, so there is definitely a delay, way longer than I would like, but that just seems to be part of the course in the industry. And my reports are basically the P&L and the balance sheet is done on a monthly basis, but other special reports like member basis and so forth, it gets done on a quarterly basis, unless you're an investor with many different kind of partnership arrangements that require that information on a monthly basis. So it all kind of depends on what the client actually needs for their reporting and just their education of what is happening with their business.
And if we have something come up like a foreclosure auction, typically that can be tracked down and figured out with time, of course, that you can give 2-week, 3-week notice and say, listen, we're going to take this thing to foreclosure soon, and we need to know what our bid price should be at. Those kind of things can be figured out, I presume, for the most part, as long as we know all expenses.
Yes.
Ted, are you taking any kind of clients on, and how do you work the books from your experience in the space?
Yes, I am always taking new clients on, and my clients are generally either monthly or quarterly as a standard. But everyone always has like specific needs come up. If a JV calls and say, "Hey, I need to have some numbers," certainly by exception all the time, we can generate a set of reports, update the books after 1 week, after 3 days, whatever is needed. You know, we as bookkeepers, we become partners to your company, and we serve your needs. And as mentioned, you know, there's fees for everything, but that's the cost of living. That's it.
Okay. I do want to thank you guys. I did again post your information in the private chat. If there's any final question, I'll let you guys go at it. But like I said, we don't want to talk about this forever. We could definitely rehash this in a couple months if we want to. But we want to keep this as general as basis. You know, some people here don't know what a balance statement is. I know when I first started, I just knew it had an equal sign at the end of it and how to equal 0. Other than that, I knew nothing about it. P&Ls, all this kind of world that investors we don't care about or know about. We know we need it. Yes, this page I'll be posted on the YouTube channel. So with parting words, if there's something we can do better, you know, I use Google Drive to hold invoice, stuff like that. Is there one parting word you can advise the investors out there to, you know, get on QuickBooks now and don't use Excel, but you advise them to start doing to keep track of things better? Debbie, from your experience, anything there?
I have a side note that is not directly bookkeeping, but I want to touch base on these 1099s and W-9s.
Okay.
You are a business owner, and a lot of times, you know, we think about ourselves just being someone doing something, right? But you are running a business, and you need a W-9 on file for every vendor that you pay. And you need that vendor W-9 on file before you pay them. Now, you don't need a W-9 only for someone you're sending a 1099 to. That is an incorrect misconception, right? A W-9 information at the end of the year will tell us whether we need to send a 1099, but we aren't getting a W-9 just because we might send a 1099.
Huh.
Hopefully that makes sense, and there's a lot more to that, but you need a W-9 on file for every vendor you pay. Wow.
Yeah, that's a good tidbit. Eunie, anything you want to add, parting words kind of thing for investors that they should know? You could add to the fact of this note world of being craziness, and you know, we think QuickBooks and bookkeeping would be so easy, just like any other real estate.
Yes, it's yes. There's definitely a lot in the industry, but I guess one of the things that I could maybe kind of as a parting tip is to you know, towards the end of the year, you know, what actually would help with your taxes and also kind of keep you more abreast of your financials is paying your bills, because taxes are done on a cash basis. So more cash goes out at the end of the year, the more you will be able to take off for your from your taxes. So that's one of the things that you can think of. Obviously, it kind of depends on whether it's an investment versus your own personal operations, but that's one of the things you can kind of think of.
Cool. Ted, funny words from yourself from your 19 or 20 years or a million years of experience?
Yeah, keep it simple. Well, a lot of things, really. Definitely, if you're going to use QuickBooks, have it set up properly the first time. Also, if you're going to have a bookkeeper, that's great. It's probably a great time saver, but know how to do it, even though you're not going to do it. Know how to do the books yourself. This is your money. Know how it's handled. Know how it's represented on a report. And I would say, again, you know, from my perspective, when I train people on how to do things, I try not to speak in accounting-ese, because most people out there who are business people are not accountants. They're not bookkeepers. You know, they barely get it. What's a debit? What's a credit? What the heck? You know. So I try and speak at the most simple level to do a most complex project, and hopefully that helps. And my experience is people appreciate, you know, things that they can understand better. So it's my goal to help you understand what you're doing. You know what you're doing in the operational world. I hope I can help you understand it from a financial perspective. Wonderful.
Once again, thank you very much for all three of you guys joining us. If you had any questions, definitely email them. It's amazing knowledge that we can go on about. If there's anything else that you guys have any questions for, feel free to reach out to me, and I'll reach out to the guests, vice versa for the guests as well. They will reach out to you guys and ask for services. Ted, one last question for yourself. In this space, would you be working with the online version or the desktop? I think the other two spoke about how they would share it. Would you be doing a desktop and sharing the file, or would you be using online and kind of letting them get access to it?
Well, I'm assuming that they've already got QuickBooks. If they got QuickBooks, I'll work with whatever version it is. If they don't have QuickBooks, I would say let's go with the desktop and do remote access. Because, you know, what the heck, let's go with the better features up front if we have a choice to start that way.
Okay. Thank you very much, guys. We appreciate it. Have a great night, everyone. Enjoy.
Thank you.
Thank you.